Hi traders, welcome to another episode on the trades we missed last week. So moving on, without much further ado, let's go on to what we had last week. This is the first trade on Monday where we can see our setup. So this is coming from a fair value gap here. You can see this fair value gap is being highlighted here. The next one you can see is that price bounces up from it and gives you a break of market structure here. Now we have a break of market structure already formed. The next thing is a newly formed fair value gap where we'll put our entry. Now we have this fair value gap. This is where you can enter this trade. So we can use this end of this fair value gap for our entry. So let's put our long position here and put anywhere around this fair value gap for higher risk reward rates. For your higher risk reward ratio, you can use closer to your order block here. So this is where you put your stop loss and your take profit will be at your given swing high, just like so. This is our TP. So moving on, we have a risk to reward ratio of 2.71. As you can see it here, we have it, boom, market hit our TP. The next is our trade number 2. Now our trade number 2 happened to be a bearish trade. Now this trade number 2, you can see the fair value gap is being tapped into here. This one here is a fair value gap, and you see how market tapped into this fair value gap, bounces up from it and gives us a bearish structure here. So the next thing is a newly formed fair value gap where we need to is what we need to find. So we have a break of structure and we have our newly formed fair value gap here. You can see it here. So this is where we'll put our entry. You can highlight it from your fair value gap to your order block right here. So like so, we have our bearish trade short position, put it here. So we just anticipate for market to tap into this area to enter this trade. So this is your entry, and your take profit would be at your previous low. You can use this because this was a previous low before market actually hit your entry. So this was where markets hit it, and your previous low would be this low before, prior to market hitting your entry here. So that was our trade number 2. So that was our trade number 2. So the next trade is our trade number 3, and it happened to be a bullish trade. So let's let's zoom in so we can see why this was highlighted. We have a fair value gap here. This is a fair value gap here. From this week to this next week, we have a space here. So market tapped into it, filled it up, and yeah, that's why it was highlighted here. So after market tapped into it, the price broke structure here. So we have a break of the previous high. Here we have a break of this previous high. The next is our entry. So we can use this order block for our entry because why? We have a fair value gap here for our trade number 3, and that is the reason for our long position right here. So we have our entry, and our stop loss is right below this low, and our take profit will be at the given high, immediate high that we can see. So this is giving us a 3.11 risk to reward ratio for this trade. So that was our trade number 3. The next trade happened to be on Tuesday, and we have our trade here. We have market tapping into this area, fair value gap is being seen, and the next thing is to look for a break of structure. Now yes, we have a break of structure here. Market broke above this previous high and the fair value gap here. So around this area is where we want to see a demand. So you can use this order block for your entry, and like so, long position here. Market taps into this area, put your stop loss right below this previous low. Since you have your entry at that other block coupled with your fair value gap, then the next is to look for your take profit, and your take profit will be at a given high. So this is giving us a 1.9 risk reward ratio. So this is a bullish trade, or you can use this fair value gap here. So if you use this fair value gap for your take profits, you can see a push to the upside, giving you a risk reward of 2 points. So that was our trade number 4. Moving on, you can see our trade number 5 was right around the corner. You can see after price taps into this area, this is a demand area, a fair value gap area. Then we have, let's put this one aside. We have a what? A fair value gap here. So we have a fair value gap here and a break of structure. So this is a break of structure, and you can see this fair value gap here. Let's zoom in. This is a fair value gap here. So price taps into this fair value gap to give us a bullish trade. So that was our trade number 5. A long position here at this other block right here. The next is stop loss. Our stop loss will be right below this previous low here, giving us a what? A risk to reward of about 3.25 for this trade. It's a risk reward of 3.25 for this first high. You can also use the swing high here, giving you a 4.4 risk to reward ratio for this high right here. So that was our trade number 5, and it was a bullish trade. The next would be our trade number 6. Now we have our trade number 6 here. This is a supply area coupled with your what's a fair value gap here. So this supply area was tapped into by this price here. See multiple candles here. Price rallied to the downside, created what's a fair value gap here. So this fair value gap would be your reason for entry. Why? Because you have a point of interest, which is your fair value gap. Your first one is being tapped into. The next is a break of structure, indicating that price wants to move to the downside. Price wants to go bearish. Then let's see a reason for you to enter because of this fair value gap here. So you use this one, you can use this one, or you just use a whole fair value gap for your entry. Or if you use a whole fair value gap for your entry to give you a lower risk to reward ratio. But this is it here. And you have your stop loss right above this high. Stop loss right above this high, and your take profit will be at this previous low here, giving you a 1.93 risk to reward ratio for this low. And you can also go to this previous low here for a maximum risk to reward ratio. So this is how it's going to be here, and this is giving you a risk to reward of 4.38. So you can see, boom, market hits your TP for your trade number 6. Now moving on is our trade number 7. Now you can see a fair value gap here. This void needs to be filled up. So market tapped into this area, this fair value gap, push to the upside, gives what? A break of structure. We have a break of structure here. The next is to find your fair value gap. All these are just inducements, liquidity that price will take out on the way to tap into this fair value gap. so making it more strong because of all this liquidity being taken out. So let me align the liquidity here. So these are previous lows that price took out, then tapped into this fair value gap, and you can see it as price tapped into this fair value gap, it rallied to the upside, giving you what's a bullish trade. So this is it. Your stop loss right below this low are created for us, that's newly formed fair value gap, and as price tapped into it, this is your TP 2.06 risk to reward ratio. Then we have what another TP here. This is giving 3.06 for this trade. So if you use this previous high here, you can see the reason for that risk to reward ratio. So that was our trade number 7. Then the next trade would happen to be our trade number 8, a bearish trade. Now we have a fair value gap as seen here, fair value gap here, price tap into this fair value gap. What we need to anticipate is a newly formed fair value gap and a break of market structure. Now after price tap into this first one, we don't have a break of structure, but price tapped again, we have a break of structure here. This is it. So the next is our fair value gap need to be tapped into, giving us our entry. Now we can see this fair value gap here, this fair value gap here, draw to this side. You can use this previous candle for your reference. So when you use this previous candle here, it might give you a higher risk to reward ratio and not even miss the trade. So this is a bearish trade, short position here at this spot, and your TP would be down while your stop loss would be right above this high that created this fair value gap. So your TP will be somewhere around here at first. This is giving a 2.37 risk to reward ratio if you use this low. This one is giving a 2.71 if you use this low here. Then this one is giving the highest risk to reward ratio for this one, giving you almost 5, that is 4.92 risk to reward ratio. And you look to the right, you see it, boom, market hit your TP. That was our trade number 8 there. So the next trade would be our trade number 9, and it happens to be a bullish trade. You can see it here. Let me show you this. So we have a fair value gap here. This fair value gap, price tapped into this fair value gap here. As price tapped into this fair value gap here, bounced to the upside, created what a very good break of structure. The next is a newly formed fair value gap. Coupled with this other block, you can use it for your entry. So we have a fair value gap at first for your point of interest, a break of structure, then a newly formed fair value gap. This is giving a very good A setup. So this is a long position here at this spot. Then your stop loss will be at below this previous low that created for us this fair value gap. Your entry right there. Then your TP would be any previous high you can find. So this is 1, this is 2.09. This won't be the highest one you can find, but moving to the left, you might find one high you can use as reference for your TP. You see our price went all the way to this one to give us a possible 6 points risk to reward ratio. So we have that as our bullish trade for trade number 9. Next is our trade number 10, and we have a fair value gap here for a bearish trade, bearish fair value gap. Market tapped into this fair value gap, pushed to the downside, created for us a break of structure here. Market broke this previous low, and this fair value gap here, market tapped into it, and this is giving us a reason to enter this trade, short position here for our trade number 10. So this is giving us a risk to reward of 2.21 risk to reward ratio because of this low. So this will be giving our reference for our TP here. So you can as well go down for a higher risk reward ratio. So if you are using this low here, this swing low here, you'll be having something like this and a very high risk reward ratio, giving you a 7.85 here, right here. And moving on to our trade number 11, see how market tapped into this area. This is a void. Market tapped into a full void. See, there's no even there are no candles here. Let me show you. There are no candles here. So let's use this as a void, your fair value gap. So market tapped into this area, broke below this previous low here. This previous candle broke below it and gives us a fair value gap. So as markets bounces off from this void, breaks below and give us a fair value gap, this is a reason for you to enter this trade. So we enter this trade at this fair value gap for this order block here. So let me show you guys short position here at this point to enter this trade. At the top of this previous high is where we'll put our stop loss. Then this one will be giving you a risk reward of 6.32 for this low, because you are not going to use this low again. You rather use the lowest low that you can actually trade with. So this is giving us a 6.32 for our trade number 11. So, and the last but not the least, we have our trade number 12 on a Friday, and this is a fair value gap. You can see here, market tapped into this fair value gap, bounces off from it, and created a newly formed fair value gap here. So we have a break of market structure as usual, break of market structure here, and see how market tapped into this area here. So this is giving us a short position here, like so, and your stop loss right above this previous high. Your take profits will be at this previous low here, either this spot here, giving you a 2.58 risk reward ratio, or this low here, exactly. So we have a 3.35 risk to reward ratio for this. So let's go back to our chart and subscribe. Don't forget to like and share to other traders, and let's meet on our next episode on the trades we missed last week. Peace.